Good afternoon, everyone, and first of all, thank you so much for turning up over here. To begin with, I'll tell you guys a little bit about Iconiq Lab, who we are, and then we'll do a rundown in ICOs. Thank you, Gaurav, for setting the stage for ICOs, actually. I see a lot of apprehension and questions, so let's go about this. Iconiq Lab, we are actually an ICO accelerator. We are an ICO accelerator and token sale accelerator program. We're based in Germany, and actually this was the first Indian event that we are doing. We are trying to test out the market and see the interest here as well. And we source startups worldwide. It was quite interesting to see that this was the first batch that we were doing, and we already received quite a few applications from India. Okay, so we helped launch tokens supported by real-world sustainable business solutions. For the course of this presentations, we'll start with why ICOs, what are the problems in the early stage financing ecosystem, and why we really look forward to ICOs and what are the problems they're solving. We'll see cryptocurrency and tokens a little bit more. We'll see how ICOs are the solution to the problems of early stage financing world, and I'll talk a little bit about the startups that we have in the accelerator right now. So first of all, this is how a VC ecosystem looks like. And before I begin with that, when you walked into this hall today, how many of you knew a little bit about ICOs? Not just from the last presentation, by a show of hands. Okay, we still have quite a few people here. That's quite impressive to start with. Alright, so this is how a VC ecosystem looks like, and if you have been an entrepreneur and been on the other side of the startups trying to raise funding, you know how difficult this is. So in the VC ecosystem, on one hand you have the VC fund. So in that you have the VCs or the investors who put in the money into the fund. And you have the VC management panel, which actually has the control over what to do with the fund, how to exercise it, what to invest it into. You have the startups which receive the funding from the VC fund. And these startups, usually they go through the route of mergers and acquisitions, they scale up and they raise their own stocks and shares, they go public to raise more money for scaling up, and over the course of this merger, M&A or scaling up, the VCs actually get the return on their investment at that stage in time. This usually takes quite a while, let's say 2 to 5 years, and if you have seen traditional startups, most of the times, quite a lot more time as well. So over here the problem is actually quite apparent. First of all, for the investors side, they are contributing to the VC fund itself. However, they have very little control on what to do with the funding because they're not choosing the startups that the fund goes into quite directly. Secondly, when VCs invest in a VC fund, there's a time period for getting the return on investment back, which is usually 3 to 7 years, maybe 10, who knows. And until that point in time, your investment is actually stuck in the fund. So there is no liquid market, there is no liquidity, you cannot take the money out and use it. It's still there. And then, of course, the control of decision making, which usually VCs have through the panel, but not as much as they would like to in terms of investing into the particular startups. From the startup side, of course, is there an entrepreneur over here who has done a startup and gone for fundraising or the like? Okay, we have one there. Great. So you probably know how tough it is, the whole process looks like. For an entrepreneur, to get into VC funding itself, to get a round of funding done, is quite difficult. Most of them, even brilliant ideas, don't get into the process of getting the right kind of startup capital to go through the process. And even while they do so, many of them do spend up to 9 months, maybe even a year, just trying to get the legalities sorted out, just trying to get the process of getting the fund done on paper. And by the end of the, let's say the 12 months or something, they begin using it up. They spend quite a lot of time pitching to VCs, investors, and the likes to get the funding done, which is useful time that they could be using, focusing on the business plan and the startup. So these are kind of the major problems that we saw in the world of VCs and venture capitalists who serve as the gatekeepers of the early stage financing industry. And again, this is why we see more and more the need for the ICOs. Okay, so a little bit into the structure of ICOs and how all the problems that we saw in the earlier slide are being solved by ICOs to some degree at least. So this is the basic structure of an ICO. So you have the ICO token sale there. On one hand, you have the startups and the project which issue the tokens for the ICO and get the public and receive the funding through it. And then you have the crypto market on the other hand, in which the coins are issued. There is a secondary market out there. So what happens over here is that VCs, or in this case just the investors, they can directly choose the startups they want to participate in, interact in, or invest in. There is no hold-up period, as in this case you have a liquid market. So you have a token, you don't like it, you can always, or you see that there is another token that you want to invest in more, you can just trade it, and there's a liquid market there, so also the risk component goes down a little bit. It is, ICOs in many ways are very structured, so it's efficient token management. For the startups, it's, of course, the benefits are way more. You have, first of all, quick and easy fundraising. We'll see that in a little graph on the next one. They don't spend a lot of time trying to raise the funding here. So this is useful time that they have actually saved so that they can focus on the business model of the company itself. They have more or less the maintained control over the company strategy. We have been seeing a lot of VC funds and the investments in ICOs. The amount of control a traditional startup usually has through the funding is a lot more, and in case of ICOs, the amount of control that you exercise on a startup which goes for an ICO is less. So this is how it looks like in terms of a timeline. So first of all, we have the old world model wherein you have a startup, you go through different rounds of funding, seed capital, you may go for an angel investment, then you look at expansion, or you go into your IPO stage, which usually takes about 7 years, 5 years, probably more. And over here we have the new world, which is created by ICOs, and you see the curve is much actually much summarized and shorter. So you have the timeline completely decreases. You're an entrepreneur, you go through an ICO, you raise your seed capital, and the fundraising round is at least way easier, and you can focus on what's important, which is the business model. So this is a little bit into the types of tokens, but I wouldn't go into it in detail. You probably have already seen it somewhere. You have the utility tokens, which are like the cryptocurrencies, Monero, Ethereum, etc. You have the access tokens, which is also what we are doing through the accelerator. It's like a premium club membership token, which comes in with its own set of advantages and privileges that you get via the token. You have the hybrid token, and as the name suggests, it just shows characteristics of two or more different types of tokens. In this case, it can act like an asset token, but show some characteristics of access tokens as well. Asset token, as the name suggests, it's backed to these asset-backed token. Like, I don't know if you guys have heard of LA token. It became quite famous lately, so that's one example of that. And this is a little bit into, I see like a lot of apprehensions at any point in time around ICOs. So this is a little bit of a look into the stats for ICOs between 2016 and 2017. The number of ICO projects that took place in 2016 is 46 as opposed to 175 in 2017. The money raised in million of USD is 96 in 2016, 2,700 in 2017. ICO-funded blockchain projects have been 12% of the market, and in 2017 there have been 52. The crypto market cap in billions has been 14 in 2016 as opposed to 160 billion USD in 2017. I think the numbers speak for themselves, and despite the hype and the apprehension, I think ICOs still stand a pretty solid ground on that front. And between a year, the number of ICO projects, and we have been trying to source quite a few, so we have also seen the increase has gone up by more than 4 times. So, this is me supporting ICOs up till now. Of course, we have lots of issues, tons of issues around the ICO market. First of all, probably the most important thing is it's still up in the air, and not a lot of people are quite sure how to run a successful ICO. So for that you need a set of skills, you need the basic time as well as the funding to take your startup idea and reach the stage wherein you have an ICO. So for that you need pre-seed funding. And we'll go into the rest of the issues as well. But before that, another quick question for you guys. How many of you have heard of the lemon market syndrome? Lemon market syndrome, it's econometrics basically. Alright, so here's a little story then. Lemons were the colloquial word that was used for a car with a defect back in the States, like let's say about 50 years ago. There was a point in time when America started importing quite a few cars, and they were selling it off because there was a craze about race cars, things like that. And a lot of bad products started coming into the market. So lemon market is a market where there's no sure way to know what's the quality of a product, especially for the buyer. So we just have products in the market wherein probably the seller has more information. So there's a lot of information asymmetry going on here, wherein let's say I have a car which has a defect. I know that, but you don't as a buyer. And you don't have any way to predetermine that this car that I'm selling is good or bad. So that's what the market looked like overall. So what happened in this market is that a lot of cars were being imported from a lot of different places all across the globe. Some of them were good, but a lot of them were starting to have defects as well. In such a market, the value of the cars is always primarily determined by the market sentiment. Why is this? Because when a buyer is trying to buy a car, he's getting a car, he has like I said, no way of knowing, am I buying a good car, am I buying a bad car? So the market sentiment in this case is, okay, let's say there is a general perception that it's an average car. So instead of, maybe I have a great car which is, let's say for the sake of simplicity, 100 euros or something like that, which it never will be. And there's a bad car which is actually worth 20 euros. However, the average price is set to 50, because that's the market perception that, okay, you have a product which is in this league and we don't know the quality, so this is what the price will be. What happens when this starts continuing is that you start getting cars, and there's a point in time wherein the good ones realize that they're underselling their product, because that's the general perception, and they start getting out of the market soon. Over a period of time, the quality of the market goes on decreasing, because now the quality products are exiting the market. The good cars are going out. And the bad cars are increasing, so the quality perception is going down again. Buyers want to pay less. And more, it sort of starts hitting a point where nobody is interested in buying these cars, because the general perception is that it's a bad car, which creates a negative bubble now, because the buyers don't want to buy anymore. This is exactly what is happening in the world of ICOs right now. So you have scams and frauds, which is what I was trying to tell you, because here the people who are doing the ICO have way more information than the people who are investing in it. There's a lot of information asymmetry going on here. There's skewed incentives, of course, because every person who wants to sell their car, or in this case the ICO, is going to oversell their product. So often projects are over-liquidated because there is no clear assessment of how much your company is worth. You have legal framework is quite complicated when it comes to ICOs, and we have been recently going through the legal framework to get the structuring done, because we have a pre-sale coming up soon, and it's a nightmare. Often there is a lot of ambiguity there, so there is that. You have unaudited token contracts. Often you'll find companies with audits done, but then again the parties which are doing the auditing here are not that trustworthy, so you really have to make sure, if you're doing an ICO especially, that it's a trustworthy party that's auditing your contracts. I was mentioning over-liquidated projects just now. There's a general lack of transparency, also because of the incentives of the buyers and the sellers over here, or the ICOs and the investors that are investing in the ICOs over here. These are some of the issues as well that which we as an accelerator felt and we were trying to solve on in our own ways. Okay, so for a little bit about Iconiq Lab, our vision is to create a world wherein every great idea is democratized, decentralized, and really it doesn't go without funding. We want to create a valuable portfolio of ICOs for the community, which includes the investors, the startups, and our vision is to be that perfect little bridge between our investors community and the startups which really deserve the funding. So for this we actually leverage on a lot. I'll tell you a little bit more about the team, but we leverage on the team's extensive experience in VC and auditing to do a lot of due diligence processes to select quality world-class ICOs. So the value proposition that we have is we source and fund. This is mostly from the for the investors community. We source and fund top startups, projects, and teams. We then invest. We give them the pre-funding to create their own ICO, and until that stage, we support them in terms of funding. We support them in terms of mentorship and our contacts and connections. We ensure that we're creating more transparency for the crypto market. In fact, we are one of the 19 projects which joined this project called Sentiment, which is Project Transparency. So we have this philosophy that we follow, wherein we have all the information which is being presented on a platform to our investors, so that they're updated pretty much down on a weekly basis on what's happening with the investment of the startups and how they're progressing overall. So this is what the digital accelerator timeline looks like. We're kicking it off in February, and we start in Berlin actually. It's going to be a 3-month program. Again, if anybody has great ideas which can be tokenized, definitely reach out to us. The startups begin with selecting a mentor team. We have a network of over 120 blockchain experts, and you can select your own mentor team of 3 people. We have the ICO workshop, where we get into your use case. We tell you a little bit about how to build the perfect white paper. We help you out with your smart contracts and other legal consulting issues. Then we go with how to structure pre-sales, how to structure your tokens. Of course, we have the Iconiq, the accelerator itself will have a pre-sale which is coming up in January, wherein the Iconiq token holders would be able to invest in the startups of the accelerator itself with further discounts up to 50% of the tokens that they're going to invest in. Apart from that, of course, as a token holder, you get a feedback cycle that you can be a part of. We provide them the ICO support and post-ICO support as well. I think I touched upon this. We have the seed funding, and in fact, quite recently we got funded by FinLab AG. This is a publicly traded German fintech firm which is expanding its crypto investment right now, and we can offer you a lot of the facilities if you are a part of the accelerator with that as well. Apart from that, we're signing deals with IBM and Bosch as we speak. And we are in talks with some other companies also, which I wouldn't disclose right at the moment. We support them with business development, the startups of the accelerator, and legal help. So we have been sourcing so far since about 6 months, and we have received more than 180 applications so far. And considering that this is the first batch of the accelerator, we're quite happy with the quality of ideas, especially that we see. Quite surprisingly, apart from finance, healthcare, insurance, and the regular sectors that you would expect in blockchain and startups in general, we have seen a lot coming in from the field of gaming, music, photography. In fact, one of our startups, PhotoChain, is all about distributing intellectual property rights and profits equally, and more from this artist's point of view. The targeted ICO size of the funding that our startups are asking for is over here, and most of them are going to raise between 3 to 5 million, and quite a few, about 25%, are going to raise more than $10 million, just to have an idea of what kind of range the funding is going for. I'll tell you a little bit about a couple of the startups that we have. So one of the startups